Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the broader markets, and we had a doozy out there. Just kidding, more of the same. Pretty slow going day, lack of volatility. We haven't hit an all-time high in the last 2 days, but we've closed at an all-time high each of the last 2 days, which is a bit interesting. But we closed up at the high of the day today. We've got resistance at 309.69, 309.99, the all-time high. Those are the two levels that we are looking at, and we would have to see a break, again at this point, still for me, 307.03, 306.06, the two most important short-term support levels that continue to hold at this point. So there's no red flags. We had a 5-minute tightening range on SPY that ended up with a bear break and then a slow recovery all the rest of the day. What does this look like? Well, it looks a lot like Wednesday to me. Wednesday, 1:30 p.m., the bear break happened. Here it was about 11:30, but the same kind of climbing action back to the high, towards the high of the day, into the close. Looking at IWM, we were watching the 4-hour lower high pattern, which is still very clearly intact at this point from these big upper wicks. But you could say we did change this 4-hour trend with the break of the high of yesterday in today's action. Clear resistances just around the 160 level. Looking at it on the daily time frame, it's an upper wick of some profit taking. So this is a daily downtrend, technically speaking. We have lower highs and lower lows, but it's the kind of lack of follow through for the bears at this point that has us look for bull flags. So there's a potential weekly bull flag unless the bears can follow through significantly under 157 support. Otherwise, that bull flag remains entirely possible. Again, IWM, out of all these names that we cover, is the only name in weekly consolidation right now, having broken the low of last week. QQQ, nice strong close, it's just sideways trading the last 6 days, still holding on. For the bulls, 199.54, 198.79, two little supports still holding, and we're just looking up at the all-time high, 202.21. XLF, still holding on for the bulls as well. It's a daily inside bar. We held the low of yesterday by 2 pennies. So again, very easy to stay bullish today in the sense that neither QQQ nor XLF broke the low of yesterday, so we know the market bears aren't going anywhere. Resistance will be 29.71, 29.89, and then 30.03. Still very healthy consolidation. Zooming out to the weekly chart, it's an inside bar forming right now. XLV also still just under its resistance. Is this a 4-hour cup and handle? You could make the argument, let's turn off extended hours and condense that down a little bit. You could make the argument it's still the psychology there with the inability to break the left side of resistance by a couple pennies and now healthy consolidation. Let's keep an eye on the healthcare sector and see if they're able to punch through tomorrow with some solid bull volume. We would need to see the break of 95.65 and 95.67 for that convincing continuation move for higher highs. XBI biotech sector, daily inside bar today. So still holding on and going to be watching for this inside bar to break tomorrow for some volatility. And if we see a break of 83.10, we look to 83.02 and then 81 as the level after 83.02. And if we get the bull break, we're looking right back at the high of 84.93. And the VIX, another little spike with an upper wick and another weak close, very similar to yesterday's trading, which makes sense because the S&P 500, as I just pointed out, looks pretty similar to the action that we saw yesterday. So all in all, not much has changed. Really, par of the course, is that the saying? The same as yesterday is essentially what it boils down to. No red flags for the bulls, and we're going to try and see those all-time highs tomorrow after a solid close all around. Gold saw continuation, so the odds of a daily bear flag decrease with this follow through. We did change the 4-hour trend in gold. This little brief consolidation into continuation. You could call that a 4-hour bull flag, and we're still looking for the daily lower high. Why was gold strong if SPY was up today? Well, it could be in part due to that pullback we saw in the middle of the day. That surely helped gold, but the dollar was down today a bit as it's beginning to consolidate. So best case scenario for the gold bulls from here is a daily trend change into next week. It's going to have to take place next week because we haven't topped out on this move just yet. And if that were to happen, that monthly bull flag is still in play. Because again, it would be just another break of support and a lack of any bear follow through. We've already seen that once on this weekly time frame. Lower high, lower low with no bear follow through, lower high, lower low, and so far, no real bear follow through. So haven't topped out yet, but when we lose the 4-hour uptrend, we'll zoom out and we'll say, okay, bulls must form a daily higher low on gold from there. Silver, very similar. So silver 4-hour time frame, getting that little higher low, higher high pattern, not as much follow through, but creating some space. You could make the argument that silver is still a potential daily bear flag. I would say gold has bounced enough. Let's just compare percentage-wise. 2.6% from the low to the high of the move. And you always got to check because the y-axis can sometimes be misleading with the size of the move on the charts. Come on, measure. And there you go. There's a perfect example. So the bounce from the bottom is pretty much the same. It just looks like there's a bit more space because of how the y-axis is oriented on these two charts. So very in line with each other, both silver and gold. Could it be a bear flag? I look at the percentage pullback. So our high was 15.16. Our low was 14.45. So we can call that $71. We'll call it 70. Midway point would be 1480. Have we gotten to 1480 yet? Not quite. So once we get towards that 50% retracement, that's when we say, all right, it's no longer a bear flag. The bounce is too significant. And we're fairly close to that mark with how much we've bounced at this point. It's probably about a 45% retracement as of right now. So miners, we're starting to look at the bear miners now because we're looking for dust to give us a daily high or low. We're looking for gold to give us a daily lower high. And we're looking for the bull miners to give us a daily lower high. For NUGT, anything under 2902 is a daily lower high. Dust had a 15-minute equilibrium most of today. High of the day, low of the day, lower high, higher low, lower high. Bear break right at the end of the day, not much follow through. And we're going to have to see a shift in momentum to get over these hourly exponential resistances, which have been rejecting the price for 2 days at this point. Have to see that shift if we are going to look at the daily higher low being set on dust. So I'll be keeping an eye on dust tomorrow. Best case scenario, if I'm looking at dust, would be for the dollar to be green and for the S&P 500 to hit all-time highs. Oil on the 4-hour time frame continues to be choppy. I don't like it anymore. Whenever I see too choppy of action on a certain time frame, I always zoom out. So here on the 4-hour chart, we had a nice tightening range. It broke bull, it broke bear, it broke bull, just no follow through in either direction. So I zoom out and I can see, okay, well, we've been within one range on the daily chart for the last 8 days. That's the range that I care about. We have our low and our high. That's it. So 57.84 is a bit of a double top right now. That's our resistance and our support. While we have one level at 56.17, most important level for me is 55.74. So patiently waiting for this sideways range to break. And again, 3, 6, 8 days, actually 9 days within this range. And we go back and look at our markets. How long have our markets been trading sideways with a little bit of an upward slant? We're looking at about 6 days or so. So fairly correlated in that regard. Natural gas, we had both oil and natural gas inventory reports today. Natural gas has not changed the 4-hour trend yet, so we're not convinced. This is definitely our daily high or low attempt, but we're not getting much follow through. We don't have the 4-hour high or low and continuation move. And remember, we're watching for that daily lower high, and we're also watching for the 12-hour time frame to potentially be a head and shoulders pattern. So keeping an eye out for DGAS and these NatGas bears. If that's all we get for a bounce and then we roll over and break 2503 support, that would be notable for me, and that would indicate that weekly consolidation is going to be a bit more significant. So let's see if natural gas continues to give us what appears to be a right shoulder forming. So we'll see if we end the week on a bang with some bulls getting some follow through. Keeping an eye on the natural gas, the minor bears, and we'll check in over the weekend. Have a good rest of your day.